Hey, welcome to the do's and don'ts of deductions for self-employed individuals. Um, Visit us at eagletaxpros.com. We really appreciate you coming to listen to us today. A little bit about myself. Well, first let's go over the agenda. Uh, we're going to do a little bit of introduction. We're going to talk about the do's and don'ts of what you should be doing as a self-employed individual, what you should not be doing as a self-employed individual. I'm going to talk about a couple client cases of self-employed individuals who got themselves a little bit of trouble, and we were able to resolve their tax issues. And then what everybody came here for is we're actually going to present our spreadsheet. This is what I gave when I did tax preparation. We gave this to our clients. We still give this to clients now. Hey, fill this out. They can use it to fill out their Schedule C, and it kind of walks you through everything. And then, of course, afterwards, if you have any questions, we'll go over some questions and answer for anybody who have questions. So why am I talking? Who is this guy and what is he doing here? First of all, I'm an enrolled agent. So that means I represent people in front of the IRS. I'm licensed by the IRS. I specialize in resolving tax issues. This is my obituary. If you want to read this, go ahead and knock yourself out. But bottom line is, I'm a retired U.S. Marine. I have over 20 years of experience doing taxes and specifically working within this realm. My I started off refereeing volleyball, and that's one of my hobbies. If you'll notice down there, I actually wrote a book, America's Tax Resolution Referee. But refereeing volleyball has brought me into being able to do more as far as meet people across the country. That's why we have offices in Hawaii, Georgia, Colorado, California, Texas, and Utah, because we travel all over the place with volleyball, and that has enabled us to have office locations at various places that we love to go to. At the same time, we go and we travel for work. And you'll love this. We get to deduct it for our trips for volleyball. And then if we want to stay longer, we can deduct the way back for business, depending on what's going on when we go, which one we go for. So we know a lot of tricks. We know a lot of ways to help you have deductions. We know a lot of ways to help you to be able to save yourself money on taxes, because that's what everybody wants to do. They want to save themselves money on taxes. But if you get yourself in trouble, we're also the people you want to call to help you resolve your tax issue. And that's really what we focus on. So as you go through this, I want you to think about, some of the do's and don'ts, but at the same time, remember everything has a little bit of it depends. There's always a little bit of area of wiggle room, and we'll work with you for you to be able to understand how all that works and what you can do as far as helping yourself to be able to do better and be better when it comes to taxes, especially as a self-employed individual. So first of all, what to do? Number one thing, always recommend open a separate account for business. Okay, it doesn't have to be a business account. It doesn't have to be, you don't have to don't go create yourself an LLC or any of those other things. You don't need all that. Create yourself a separate bank account for business. It can be a personal account. Like when I first started, I had a personal account that I used just for refereeing. I had a personal account I used just for my tax business. And then, of course, I have my own uh, account for my personal side. So, but all these were actual individual accounts in my name. It doesn't have to be in some, LLC or, like I'm a corporation now, but back then I wasn't. Just stick to simple. Make it simple, keep it easy, and will do better. Okay. So a separate bank account just used personally for business. That is where you want to put all your deposits, all your income goes into that account. Why? So you can track how much you made for the year. Not everybody has, bookkeepers on top of bookkeepers to check bookkeepers to what they're doing. A lot of people don't start with all that. When you first start a business, your job is to go out there and whatever it is, whatever your passion is, whether it be construction. We have a lot of construction clients. We have everything from roofing materials, sales. We have a lot of salespeople. Matter of fact, today was the day for sales. I talked to 3 different clients with sales issues that that were doing outside sales for other companies and self-employed. We have everything from concrete, you name it. We see all those different types of businesses. Here we mostly focusing on talking about the service-based businesses mostly today, not the retail. There's a little bit different, a lot of different things happen with the retail side, but with a service-based business, you'll have those separate. You'll be able to put those deposits directly in that account, And then most importantly, when you start spending money, use that account to spend money out of. So there, when you do that, you'll be able to record your expenses, and we're going to talk about ordinary and necessary. Probably beat it to a stick, but ordinary and necessary means basically if you have a business, is it ordinary for you to use it? Is it necessary? Like for example, if you have a car, you drive Uber. Like I get in an Uber, and if it's dirty, it's disgusting, they're getting a low rating. Like I don't want to ride in that car. That guy is not getting good ratings, which means that they're not going to be able to increase their business. They're not going to get more rides from Uber or Lyft or whatever it is, rideshare company you're using. They're not going to get more rides because their car is nasty. So you want to make sure that your car is clean. If you're doing rideshare driving, going to the car wash is a necessity. Okay, so it's not only ordinary, everybody's doing it, but it's also a necessity. So car cleaning in that case. Now, if you own a housekeeping business, you come and clean houses, you don't need to have a clean car. I mean, it would not be ordinary for you to, everybody that does housekeeping doesn't necessarily have to have a clean car. So, plus you're good at cleaning, so that's kind of a weird one, but you want to make sure that you're using expenses that are directly related to your business, and those are ordinary and necessary expenses. That's the key that we're focusing on, how we do that and how you run that down. Again, we'll get into a little bit more details, but those are the key things. It's something that is everybody else is doing normal, and then what is necessary is absolutely necessary for your business. I'll get it in one you'll get a kick out of here in a second. Do not commingle your personal and business finances. Um, we actually do a video. You got to follow us on Instagram. You'll see my wife doing this, slapping her head, going like, "Stop doing this," because when we get people that are in financial trouble or that need tax help, one of the biggest things we do is we go look at their financials. So we create financial picture for them for the IRS to explain why they can't afford to pay, $100,000, $900,000. We have a $900,000 plus case right now. Got a couple, mostly in Hawaii right now, but we got a couple going right now across the country. But these high income cases or the high expense cases where the IRS says you owe a whole bunch of money, and then I go into your account and I've got your wife's checking account is deposit in there for her, whatever her work is, or you have W-2, maybe you have both kinds, and you're running your W-2 income in there, and then you're running your business income in that same account, and then you're running some side business, side hustle going in there. Oh, and then my favorite, you're taking care of a grandkid and you're depositing, that child is sending you money. All those deposits, the IRS looks at. Okay, the W-2, that's easy. We can tell what that is. All the rest of deposits going into that account, when the IRS looks at it, they think it's income. So we have a client right now down in South Texas who is, her son is, he travels and does things like that. So when he's traveling, she takes care of her grandchild. Well, she doesn't get paid to take care of her grandchild. That's her story. But then when we look at the bank account, Christy's over there doing, oh goodness, what's going on? Because we look at it and the thing we see in there is a whole bunch of deposits that look like it's somebody paying for childcare. And she's like, oh no, I tell them that I took, the grandchild over to, the store and we bought a few things. We bought some shoes. And so here comes a $3,000 deposit, a $1,500 deposit. It's like, that doesn't look like shoes. That looks like income for caring for the child. So therefore, now you have a business and we need to record that, and we need to do what we're talking about here, having a Schedule C and things like that for that business. So make sure you don't commingle your personal and business finances. If you have a personal account, then keep that separate account. You're going to be able to take money from your business account and transfer it to your personal account anytime. I usually recommend that you have your personal business account at the same bank. It just makes it easier. Like, for example, I'm a retired U.S. Marine, so I use USA for my banking, and then, or Navy Federal, I actually have both, but I use the USA. And then when I started a business, I had a separate personal account that I used for my volleyball at USA. and I would just move money over, no problem. As we got bigger, obviously, I needed employees to deposit, do other things like that. So we changed banks. But again, you want to make sure you keep things separate, okay, as you go along. Do not commingle your personal and business. It just makes things messy. And the other side is you start spending money for your business out of your personal account. If you get in trouble like some of our clients do with the IRS is saying, okay, give us all your business bank statements. And then they look at it and you're like, well, I actually have more expenses than that. I pay for this, this, this. Well, what are you paying for that with? Show us the credit card or whatever it may be. And we're looking for the business credit card or something that, even if it's a personal card used for the business. I like miles, I like to travel. So I use a United card when I first started. That one United card was used just for travel and used exclusively for my volleyball. But again, you want to make sure things are not commingled. If I start using it for other things, personal stuff, and the IRS want to look at it, the IRS is going to discount all of my business expenses from there because they're saying that's a personal card. And the opposite goes when you want to keep your business stuff separate. Let's say that you're looking at your business account. I have a client that is in payroll trouble right now. And if we start looking at his business account, he's using it like his personal checking account. So the IRS is including everything that he has, including his home, because he's paying for his home out of his business account. So again, the IRS is saying, hey, now that belongs to the business. So we can get access to that home. Keep things separate keeps you out of trouble. Okay. Keep things separate to keep yourself out of trouble. Also avoid excessive expenses. Okay. If maybe you like a nice watch or something like that. If you're a business person, you like showing off a nice watch. Okay, that's fine. Okay, but you don't need to go buy a $30,000 watch if you're only making, 50,000 a year or 100,000 a year. Going and having something excessive, again, is not ordinary necessary. And again, it's excessive. So maybe, keep an eye on that. Make sure it's something that's normal and used by other people. And again, here's the ordinary necessary. Again, same thing, just like everything, we keep going back to this because it's important. Like, for example, a ski trip to the Swiss Alps. If you're a Colorado painting company, maybe you like to ski like I do, and you want to go to the Swiss Alps and ski. Oh, I'm going to write that off my business. It's a business. I talked about business. No, it doesn't work that way. Just because you talked about business does not make it a business trip. Okay. So stop listening to YouTube or whatever it is you're listening to that's telling you these things, because I go out there to TikTok and I get clients from there because I watch what they do. I make a comment on it. Next thing is like, hey, can I talk to you? And they're out there making all this content about what to do to get out of paying taxes. And then they're hiring me to fix their tax problem because they got a problem. So remember, it has to be ordinary necessary. So again, the Swiss Alps, let's go with this example. You're a Colorado painting contractor, you want to go out there to Swiss, go skiing or something like that. And, you can't write that off as a business expense. Now, if you're a custom painter and you worked specifically with doing, some type of art research or something like that, where you did have to go there, it could be possible, but again, it needs to know. I used to call it the laugh test, or the just the belly test. If you say it and you can't help but just smile at yourself, we can go with the BS test, whatever you want to call it. But if your grandma's going to laugh at you and say that's BS, or you have to sit there and try to justify why it's a business expense, it's probably not a business expense. Okay, so stick with that. If you tell your spouse or you tell your significant other, or you tell one of your friends or whatever it is, hey, I'm going to go do this and it's for business, and they look at you like, really? It's probably not legit. Okay, so just keep that in mind. Focus on what you want to do and make sure that things are accountable. We're going to show you the spreadsheet a little bit later on, but we want to make sure you understand the ordinary necessary, and that is the key here of this presentation. I know you're going to skip to the end, but the key is ordinary necessary. It talks about the Internal Revenue Code, section 162A, ordinary. It's commonly and accepted in the taxpayer's industry, whatever it is. It's normal. Everybody's using it. Like, for example, you are a roofing contractor. Okay. You buying tools to do roofing is common and it's accepted in your industry. Okay. You buying a Maserati is not common. Okay. It's not accepted in your industry. It's not something you're going to necessarily go use in your industry. Okay. Necessary, it's appropriate and helpful for the business. In other words, you need to have it. Again, roofing contractor, let's go to that again. You have a pickup truck. Okay. That pickup truck has got room for storage, moving things. That's great. Or maybe you're just doing the sales. Maybe you're the owner, the boss now. You're out there driving, and maybe you buy a Tesla. Okay. Or one of those vehicles that you use to travel around and, save yourself on gas. Great. Would it be necessary? Yeah. You're going to all these appointments. You're doing sales. You're doing that kind of stuff. Sure. Is it common and is accepted? Yeah, that would be common and accepted. Okay. But, having, the big old, having something that's not normal in your business, again, that laugh test needs to come into play again. Think about it. What is necessary? I deal with a lot of, like for me, I deal with a lot of volleyball people, a lot of sports officials. I actually work with an ASO to do presentations and things for them. And we talk about what is considered ordinary necessary for that industry, for if you're doing sports officiating. Having the fancy car is something that's not necessary for you to go and officiate a game. Just doesn't work that way. But going and buying, maybe going to the gym, having a membership like that would be more ordinary necessary because you have to be fit to be out there. You have to go run. Maybe you're doing soccer, you're exercising, you have to be out there. That is common and accepted in your industry. Me sitting at a desk for my tax prep, for my, tax resolution firm is not necessarily for me to go have a gym membership. I can't really write that off in that case. There's things we'll talk about, benefits for employees and things like that, but that's just a normal writing it off is not common and accepted in my industry. Okay. Again, business expenses can always vary depending on the nature of the business, and you need to just take that in consideration. Is this something that everybody else is doing? Is it common and accepted in your industry? Is it appropriate or helpful for your business? So let's talk about some of the cases we deal with. In this case, we have a client. This one, actually, they went out there, they owed 120K, 100, a little bit over 120K. They were, they drove Uber and Lyft. Before that, they're doing sales in other industry. They're out there doing mortgages and build themselves up a huge tax liability. We're able to go in and get that offer accepted for $2,143. So we're able to get rid of $120,000 and bring it down to $2,143. So those are ones we get to do these a lot of times. Again, this is a big one. Some of the little ones we get, this one's a little bit smaller, $96,000 they owed for all these tax years, 11, 14, 15, 16, 20, and 21. Total tax liability of over $96,000. We got an offer accepted for $4,362. We don't want you to get into this problem. Okay. So the purpose for this, when we start talking about these is, these resolution that we're able to do for people, could you imagine right now it's 2024. This was accepted not that long ago. So they tried to fix their tax issue back in 2017. That's why they have 11, 14, 15, 16 that they just had done back in 2018 or 2016. They worked with another company that we're not going to talk about right now, but they're really big and they advertise a lot on the radio. And they went and did all these tax returns and then they never got anything done. So they had current liability, which was within that 10-year statute. So you're asking, well, it's 2024, 10 years, 2011. Well, no, they had filed them in 2017. So all these returns were current back then, and they were not going to expire until 2027. So they basically put themselves a big liability thinking that they're going to move forward. They never did that. And then they came to us and said, hey, can you help us? In 2022, we went out there, looked at it, took them on as a case, got everything resolved, and we're able to close access. I think it was 2023. It's just this last year we closed this one. But again, we see these all the time. These are self-employed individuals that get themselves in tax trouble because they're running their business. And I get it. I get it. When I first got going and I started doing, when we used to do a lot of tax returns, and I specialize in small businesses. I specialize in working with people that were self-employed, that did not have cost of goods sold, that were doing a service-based business, and that was my specialty. And because I would spend a lot of time researching the tax code, I'd spend a lot of time looking at Parker tax law. I'd look at all these different areas and follow the IRS and see what they're allowing now and learn what I could use to be able to help these clients to save money on taxes. Like a Section 105 plan, which is, I'll explain to you a little bit later, but a Section 105 plan basically, writing off medical expenses for the family, things like that they're able to do. But these people did not have that benefit. They went out there and just filed their tax returns. But, like I said earlier, I understand, you are a business owner. You are whatever it is you're good at. Maybe it's cooking, maybe it's art design. Like I can't design my house to save my life. I'm creative with the IRS, but when it comes to, just hanging up pictures, when I bought my house in Colorado, I couldn't even hang up pictures because I didn't know where they go. Put them in there all crooked and stuff, and it's fine, whatever. But these people, you guys are creative in what you do, and you're very successful because of that creativity. You know what you're doing, you know your business, you know your industry, but maybe you don't know tax. So that's something to consider as you're moving into things, how you translate from whatever your business is, and again, treat your business like a business. That's the biggest problem that I find with many people when they first get going, they first get started on this. Maybe they're working their W-2 job and they got something going on the side. We've got a client right now who's a concrete contractor, and they're doing very, very well, but they still have not converted to saying, hey, this is a real business. We need to start doing things differently. Like his wife wanted to start working in the business, and it's like, no, this is kind of my thing. And it was like, you need help, you know, whether it be hiring a professional to a bookkeeper. And by the way, we know a lot of bookkeepers. We have a lot of links for bookkeepers. So, contact us. We'll link you up with one of the bookkeepers, or we have a lot of tax preparers that refer people to us. We'll link you up with them to get your taxes done, so we can work on the resolution part and they can work on the taxes for you. But, go see these professionals to help you to be able to get through this so you don't owe this kind of money. We don't want you to have $96,000 in liability or $100,000 or $1 million in liability. We want you to be able to get through this without having that problem. That's what the purpose of this is. So let's go into our spreadsheet real quick. I think I can open it from here. Give me 1 second. All right. So this is big enough for everybody. I want to make sure you can actually see it. So what we did is we went ahead and created a spreadsheet to help. Thank you. Carly, our magical girl coming in from the woodwork center, shows up on my screen and helps me out. So Mickey Mouse is a volleyball official. Whatever this is you, this is your business name, whatever you want to call it. We look at your total receipts. What is your receipts? How much money are you making? Okay. When we're doing resolution for you, we're going to look at this. We're going to look at this number and figure out how to help you to be able to work through this. So we're going to help you get through this. So your total receipts, that's the money coming in the bank. Remember your deposits on your separate business account. One thing you have to watch. Okay, so that we see this a lot. People that are using things like Zelle, Square, all these different companies, QuickBooks payments, whatever it is, those deposits may not include all the rest of this, it may not include all the rest of the expenses on your account. So it may only be depositing your total. Let's say you have a 10% that's being withheld for, service fee. So you're depositing $90,000 and $10,000 is being held. We see this a lot with Uber drivers going through. So that's one thing, for example, they only get so much in deposits, but Uber or Lyft is taking all this other money on the side. So your total receipts is your total receipts, the actual what you receive for your deposit, not what's necessary in your bank account. Make sure you look at that difference. We'll show you where to write that off later. Advertising, like for example, if you're someone like me, I have advertising. We spend a lot of money on that. Business cards, things like that. Again, ordinary, necessary. Not necessarily you going out and golfing a foursome with your friends is not advertising, okay? But if you putting up sponsoring a tea, that would be considered advertising. Commissions and fees, this is where you list those fees. Like for example, if you're doing that Uber or Lyft or something like that, that is where you would do those commissions and fees. So that's the money they took out, they withheld from you. Or if you're a realtor, we see a lot of that, they're paying their brokers commissions and fees. Contract labor, be careful with this one. We'll have a whole nother class on this, but contract labor, if they're an employee, if you're paying them, telling them where to go, you're providing them tools, they're driving your vehicle, you're telling them what time to be there, what time to finish, exactly what job to go to, and it has to be them doing the job. They are not contract labor, they're an employee. Okay, so we'll get into that. That's a whole nother class. Follow us, link below. You'll be able to keep track of those things. Insurance. This is insurance, not car insurance. This is insurance for your business. Liability insurance, things like that. So you want to make sure you're watching that. Make sure you're taking care of the correct area. Your insurance is liability insurance. Things like that goes here. Or if you have employees, maybe you have something like different kinds of insurance. Like we have E&O, all these other insurance. Depletion, not necessarily going to use for most service businesses. Depreciation. Okay, we have a separate tab. I'm going to talk about that in a second. But basically, if you buy something like a computer, then that item will be depreciated. Usually for me, I use a $5,000 limit. So if it costs more than $5,000, I'll depreciate it. If it's less than $5,000, I'll just expense it off as whatever it is. Employee benefit program, Section 105 plan. Follow us, learn more about this. I've done other videos on this, but basically this is where you can write off whatever it is that's coming out of, let's say you're a husband and wife, your wife has money coming out of her check for healthcare, you can write off the portion that she's paying in your business as a Section 105 plan. So that is a medical expense plan. It's a self-managed HSA. Another class on that, learn a lot about that, but basically you can write off those things. Little tricks, ask more, you'll get more information. Is insurance other than health? Okay, I guess it's listed twice. Mortgage. Okay, this is only if you own a business, own a asset in your business. Your business owns it. Let's say you have a shop that you have. That's where you write your mortgage off there. Otherwise, you don't put there. Interest. This is the other for interest. This is interest. Like for example, if you have that credit card, remember we talked about using that separate credit card. You're going to write off that interest for that particular credit card right here. Okay. Now, if you're commingling, you just messed up because the IRS probably will not allow that interest because you commingled of how that works. Legal and professional fees, again, tax prep services, things like that, legal services, that's fine. Office expenses, again, pens, pencils, papers, things like that. Rent. This is one of our profit sharing. Most people don't use that, but if you have a retirement, putting into a retirement plan for your employees, that's something you can do the deduction there. Rent, you rent vehicles or you rent other business property. Like for example, my office here is I rent that, and I've rented it from back when I was just a Schedule C. I rented this office. Vehicles, most people will not rent a vehicle, but this could be it could be a lease. If it's a lease, it's going to be different. You're going to have a lease add back, much more complicated. We'll talk about that, but mostly this is we're talking about rent when we're talking about other business properties. Okay. Repairs and maintenance. This is ordinary and necessary. Again, fixing your computer, if you're, working some type of digital program, fixing your computer would be repairs and maintenance. But going out and getting your car fixed is not necessarily going to show up in repairs and maintenance. That goes someplace else. Supplies, self-explanatory. If you're doing some type of service business, you may have supplies or if you're a contractor, that may be where you put your supplies at. Taxes and license, training and certifications, things like that. Realtor, all the little lockbox codes, things like that. Travel. I'm going to have a whole nother section. I'll talk about travel, but these are, again, ordinary necessary, meals. And of course, we have our cell phone. Meals need to be where you are away from home. Like you can't be less than 50 miles from home and write off your meal, because you just need to work long. No, it doesn't work like that. It needs to be outside your normal area. And then your meals need to have a business purpose. So if you're meeting with clients on a business purpose, that's fine. That's a business meal, that's fine. But if you're out there, just having meals for yourself, that Uber driver is stopping at, in and out, it's not necessarily a meal. Again, cell phone wages, those are on here too. Clothing. Everyone wants to like my nice jacket here. I think, oh, I can write this off. No, you can't. Okay. This can be worn anywhere. It's not a business expense. Okay. Sometimes I'll wear a shirt that's logoed. If it's logoed, that could be written off as marketing. But your general clothing, things you can wear outside of the normal day are not going to be, you're not going to be able to write those off. The next thing is going to be travel and mileage. Right here, we set up the IRS wants to know where you went, point A to point B, when you went there, and the purpose. So the start time, start date, end date, your description, why'd you do it, where you went, what your one-way mileage is, what your total mileage is. Um, those are all included in here. Any notes, if you paid for parking, you can write those off. Tolls, meals, while you're traveling. I use this. This is a travel sheet as well. Flights, hotels, things like that. That's you can write off. Again, remember it has to have a business purpose. What I recommend, I use personally, something like MileIQ is something that tracks you while you're driving. It tracks all your mileage because you have to have your business miles, your commuting miles, which is driving back and forth to your W-2 job, and then your personal miles. You have to have all three of those numbers. Okay. Make, model, of car. And then this is like, for example, if you have a car loan, your interest, your vehicle registration, because there's going to be everything's going to be breakdown in percentages. So this is pretty self-explanatory, but if you're traveling, again, these are your travel areas and make sure that it's all directly related to your business. The next thing is, and this is my favorite. I was like, oh, why, don't use a home office because it's a red flag. No, it's not. Stop that. Okay. I don't know where you heard that from or who you learned that from, but obviously they don't do what I do. It's not a red flag. Plus, like, for example, I'm in one of my offices here, and let's say I came from my home to my office, but I don't have a home office, then my starting place for my day, my normal business location is my office. I can't write off the trip to my office now because I don't have a home office. I'm not functioning from there. So if you have a home office, you can do your normal work. For example, if you have employees, you're not necessarily going to deal with your personal banking in the office where everybody else can hear you. You're going to do that at home. So you want to have an area that's for exclusive business use. It could be a desk. That's fine. It gives you that starting place for your mileage. One, it also allows you to write off some of your housing and expenses. So here we use the spreadsheet, for example, gas, water. If I'm in Colorado, it's $300 a month because it's ridiculous. And then that just writes off all the different expenses. Of course, California, it could be the power here, $250 a month, and it calculates it all up and gives us the total. Direct expenses, like for example, if I have internet, let's say I'm home based, mostly that's where I work at, I can write off my business, my internet, just my internet, not the whole cable, not the whole package, but just the internet portion of that bill. So maybe that's $50 a month. Okay, we can use that as direct expense. Now, this is a fun one. Over here, you got your rent. Let's say your rent is, you live in Southern California, your rent's $2,800 a month for a one-bedroom hole. You can write off the business percentage of that. If you own a home, your HOA is going to come in here. We'll use the same thing. If you own a home, we'll use this for your other side. And then, of course, depreciation, this is where you write off part of your business. All right. So now everybody's favorite part is the question answer. I know there's a few of you on here that have some questions. So what I've got, my lovely assistant Carly is going to come in and ask those questions on your behalf. I don't know. Can you see her there? There she is, right there. I don't know. All right. So Carly, what do you got?
All right. So one of the questions we were asked, what can I legally deduct as a self-employed individual?
What can you legally deduct? Again, ordinary necessary. You can legally deduct your ordinary necessary business expenses for your business. So that's, I think we kind of beat on that a little bit, but it's got to be ordinary and necessary. A couple things that people get confused about. Entertainment. That one I hear a lot. People ask about entertainment. Oh, Carl, you don't want us to see you anymore? Fine, I'll put you guys over here. All right. Entertainment. So people ask, like for example, I have season seats to a couple different sporting events, go Broncos, and I cannot deduct that in my tax resolution business. Why? Why, you ask? Well, because it is not, first of all, it's not ordinary necessary. People that have my type of business don't necessarily have that. And then the other part is, if it's considered entertainment, if I'm taking somebody just to go do that. So the ticket cost would be considered entertainment. And since the tax law changed in 2018, entertainment is not allowed. So you cannot deduct entertainment as part of your business expense. So you take people out for, you know, games, shows, events, concerts, you can't deduct those anymore. Sporting events, you can't deduct those. You can deduct the meeting expense or the meals. So, like, let's say you have a suite, the food you order into the suite can be deducted. Or if you have a suite and you have a meeting prior to with an agenda, everything like that, and then the meeting space happens to also open up afterwards for a game, okay, we can work with that. But again, it's got to be ordinary necessary. If you have, if is your business going to support that kind of expense? A lot of times I hear no. My other favorite one is I had a tax preparer tell me, when I looked at an expense and the IRS was not allowing a package store expense. Those of you who are on the East Coast know a package store is usually where you go buy alcohol. And the taxpayer said, well, I can't tell my client that they can't have a liquid diet. Yes, you can. Okay. You can't deduct alcohol because they're lonely with their Netflix watching it in their hotel room. You cannot deduct that. That's not an ordinary necessary business expense. At a hotel room, you can't have your Netflix. So that's a legit one. This is real. This stuff happened. I talk about it because it actually did happen, and I've heard it before. So again, we will help you. We'll help you, train you about what is legal and necessary. Or, if you have a tax preparer, go to your tax preparer, talk to them. They can teach you what to do. Carly, I think you have another lead on question I saw earlier coming on talking about taxpayer. Let's get her with the here's the big smile. Yep, here it is. Here it comes again. What is it?
Alrighty. So another question we actually got this one twice. How can I ensure accurate record keeping?
How can you ensure accurate record keeping? Okay, there's a couple different things. One, again, keeping that separate bank account will help you to keep that accurate record keeping. The other thing that I always recommend is using a software. There's Zero, there's all kinds of different softwares that are out there. We happen to be in with the QuickBooks thing. Not my favorite, but there's a lot of different ones out there that can help you keep track of your expenses. Use a software called Receipt Bank. A lot of different ways to track your expenses, but the bottom line is if you keep things separate in in the business account, the personal account that's you call it your business account, um, and you don't have a lot of expenses, it's not that hard to keep it on a spreadsheet. And then you just keep those expenses, you turn around, take them and put them right into this spreadsheet that I presented to you, put all your, just total it up, and then you can hand this to your tax preparer and they can do your taxes with it. So again, this is one way to get you into it. And those categories on that spreadsheet happen to exactly match what's on that Schedule C. Don't be listing a whole bunch of stuff just in other. If you're doing that, it's just lazy. Put it in where it belongs and get it there so it makes sense. Okay, but keep track of it, that separate business banking account, that separate bank account, or the separate, if you have a different credit card you use specifically for business, don't commingle, keep it separate, and it makes it really easy to track. And if you're like some of my clients that just can't figure this out, I highly recommend getting yourself a permanent marker and write on the credit card, business only. Okay, so when you pull it out, you get ready to use it at the gas station, you see it, and it's like, oops, wrong one. You put the right one in. Okay. So whatever works for you. I happen to have a Mickey Mouse card with Mickey going like this for my volleyball account.
All right, one more question and then we can wrap up. When do I know if I should hire a tax professional or do it myself?
Oh, my favorite question. I love this one. When should you hire a tax professional? Um, I love this one because I used to get this a lot. It's like, why would I hire somebody? Okay, first of all, take your business seriously. Okay. You own a business. You're in this webinar, you're watching this because you own a business. Okay. Take it seriously. Treat your business like a business. If would you want to work for a company that doesn't have professionals helping them with payroll? Like they're just willy-nilly just throwing things out and like hope everything works out, hope that everything's okay. No, you want to work for a company that has professionals giving them advice, learning from them. A good tax preparer is going to help you grow your business. They're going to teach you what you need to do. You know, besides watching this webinar, you're going to see this online, but go see a tax professional. If you need a referral, trust me, we get plenty of tax professionals we work with. We are their resolution arm, is what I call myself, because we don't necessarily prepare tax returns here at Eagle Tax Res. We do resolution. We fix people's tax problems. We have tons of great tax preparers that we work with that do not do what we do, but they are experts at what you need, giving advice, maybe even helping with tax planning, payroll, whatever it is, they can help you with your business. Okay. So treat your business like a professional, treat your business like a business, and go see a professional to do your work. Now, if you made $1,000 for the year, maybe you might not necessarily need a tax professional. Okay. But if you're treating it like a business and you make 50,000 or more, or 20,000, whatever it is, do you know all the write-offs that you need to do? Do you know how to put them all together properly? Are you going to put your mortgage accidentally on your Schedule C where it says interest, and then now you've written off your entire mortgage on your Schedule C? Guess what? You're going to be calling me and I'm going to be helping you with that audit. Minimum fee $6,500, 6500. Okay. Was that $1,200 CPA tax professional to save you that mistake? Not to mention the fact that paying for my fees, but you're also going to have penalties. We're going to try to work with them, but we're going to have to deal with all that. Okay. Would you rather pay somebody up front, a tax professional up front, to do it right than have to come see me? Now, trust me, I love it when you guys do your own tax returns. If you want to keep doing that and you make mistakes, give us a call. We can fix it. We can come in and help you afterwards, but save yourself the money. I do want another Harley, but I don't need it because you made a mistake. Let's not go there. Okay. Let's do it because you legitimately had a tax problem or you made so much money that you just couldn't keep up. Those are the tax problems I love to work with, not because you just decided not to use a tax preparer, made a mistake, entered into yucky tax or blockish or whatever it is that you did. I would rather help you to be able to control after you make a lot of money and deal with it that way rather than mistakes that could have been avoided. Okay. So try to help yourself not have those mistakes that could be avoided. Go see a tax professional. Invest in you, invest in your business. I hope that answers all your questions. Carly, we have any more out there?
Nope, we're good. I think
Okay,
that's all we
so
have time for
I think
today.
she's answered all the other questions out there and all we have time for today. Again, thank you for joining us. This is our website, eagletaxres.com. Put a backslash referral if you know somebody that needs help with their taxes. We love referrals. We love helping you out with referrals. So if you have somebody that needs help with their taxes, go to eagletaxres.com/referral. That'll get you so you can fill in the information and we'll know who referred them, or just send them to our website. Have them give us a call. Make sure they tell them that you sent us. These are some of our office numbers. We have office in Georgia as well, but phone numbers, give us a call. Again, 888-EAGLE, 888-EAGLE-5 is a great number to call us at. Give me a call. I can help fix your tax problem. That's what we do every single day. Thank you and enjoy, and I look forward to working with you in the future.